Hello, this is Kurt Halverson with Hometown Credit Union. Today we're going to be talking about credit cards, debit cards, ATM cards, and charge cards. What's the difference? What's the similarities? And what do you need to know about these different products? So, we're going to start out with what's called a charge card. And I'm sure a lot of us have heard that term before. Sometimes it gets used interchangeably with credit card, but it is a little bit different. So, the concept of charging has been around a long time. You go into a store, and sometimes people will joke and say, put it on my tab. Well, it used to be quite common that a lot of places offered tabs for customers as a form of goodwill, especially like grocery stores. So somebody might be a loyal customer for a grocery store back in the turn of the century, and they might be tight on money towards the end of a pay period or the end of a month, and they could go into that grocery store, they could buy things on credit, and at the end of the month, the grocer would send a bill to that customer and they'd pay it in full when they got their next paycheck. So that concept has been around for quite a while. But back in I believe it was the 1930s, Sears came out with charge accounts. So you could go into any Sears store, you could buy something now and pay for it later. And they actually issued a metal plate that you'd have with you that had your name embossed on it and your account number, and the clerk would copy that information down on a carbon copy sheet of paper, and it would go to their accounting department, and then you would get a bill for what you owed at the end of the month. Now, in the 1940s and 50s, after World War II, when people became much more mobile, gas stations jumped on the bandwagon and started offering charge cards so that wherever you went, you would hopefully stop into that particular brand of gas station to fill up your car. And it was a way to help build loyalty. Again, you could charge things to your account and you'd get a bill at the end of the month. It wasn't until the 1960s that people started to see interest charged on those charge accounts. And now it's quite common where if you have a charge card with some place, you are going to be paying interest, and typically it's a higher interest rate for having that service. Usually when you see a charge account, whether it be with a chain store or a gas station now or things like that, usually the interest rates seem to be about 20 to 25% is what you pay on those. So it's like a credit card. You can buy something now, you pay for it later when the bill comes. You do have to pay interest on the money that you borrow, just like you would on a loan or a credit card. Some charge accounts offer a grace period. So if you pay the bill in full when it comes, you don't have to pay any interest. Some charge cards do not offer that. The other key to what makes a charge card is that it can only be used typically at one or two retailers. So for instance, if I had a Kohl's card, it could only be used at Kohl's. If I had a Cabela's card, it could probably only be used at Cabela's. And that's what makes a charge card rather than having, say, a Cabela's Visa card that can be used any place, but it's got the Cabela's brand on it, right? So charge cards can only be used at a specific brand of store. So again, these cards can be used at that particular store. Sometimes they do offer discounts. So if you buy things on your charge card, you can save money off of your purchase. And Kohl's is a great example of that, where they send out the coupons, and then you can take advantage of those savings. So charge cards can be great if you can pay them off all in full. But what can get people into difficult financial situations is when you carry a balance on that charge card and then you're paying that high interest rate each month, and it can be hard to get ahead on those. It will help build credit. Most charge cards do report to the credit bureaus. So as long as you use your charge card responsibly, it can help you build credit. And if you check out my credit score video, that will tell you more about helpful ways to build your credit using charge cards and credit cards. So a credit card was kind of built as a piggyback off of the charge card. There were banks that saw how successful charge card programs were, and they said, what we'd like to do is create a charge card that could be used any place, right? And so the very first version of a credit card came out in 1958, and it was later known as the Visa program. And MasterCard came out in 1966 to compete. And the more popular these cards got, the more stores and restaurants and things accepted them. And in the 1960s, credit card companies and banks actually got in trouble for doing what was called a credit card drop, where they would mail out their customers credit cards that were open and ready to be used, that the customers didn't apply for. And so the government had to step in and say, nope, you can't do that. If somebody wants a credit card, they have to apply with you to get that credit card, and you have to show that they can qualify for it. So what makes a credit card unique? It can be used almost anywhere. Basically, any place that credit cards are accepted, you can use that. You can shop around for competitive rates, but watch out for fees. Sometimes credit cards will reel you in with a low introductory rate, but they might sneak different kinds of fees in there, so be aware of that. Also, they may offer introductory rates, so they might start you out at a low rate, but that only lasts for a short period of time before they bump you up to a much higher rate. Credit cards, again, when used responsibly, can definitely help build your credit score. And credit cards do offer fraud protection. So if you happen to have your credit card stolen, somebody else makes charges on it, you can report that as stolen and recover those funds. As well as credit card companies will have fraud monitoring systems where if they see most of your transactions were done in southern Minnesota, and all of a sudden transactions are popping up in California or Florida, they will stop those transactions. They will reach out to you and say, hey, is this you using your card? And they can, a lot of times, be able to stop fraud as it's happening. So charging credit cards kind of follow a cycle. We'll start up in the orange circle. Purchases are applied towards the credit account when you're at the store and you use your card to pay for something. Then they're billed at the end of the cycle. So the company says, okay, what did this customer spend over this cycle? Here's the bill. They issue what's called a statement that goes out in the mail that shows you what you owe, what your minimum payment is, how much you'd need to pay if you paid the whole thing off in full. It will tell you if there's any late fees. It will tell you what your interest rate is, all sorts of helpful information on there. A lot of card companies do offer a grace period. So if you pay by this date, you don't have to pay any interest, but you'd have to pay everything in full. If you make the minimum payment, then you are going to have to pay interest on the balance. So if you pay just the minimum payment on a credit card, it's interesting to know how long it can take to actually pay off that debt. Because when you're paying just the minimum payment that's required by the statement, most of that money is going towards paying down the interest that you owe and not paying down the initial money that you balance or that you borrow. So if we look at the 2% minimum payment here, which is what most credit cards require for their minimum payment, and if you were getting an 8% interest rate, which is relatively hard to find, that's a very competitive rate. If you paid that minimum payment each month, it would take you 61 months to pay off that debt. Now, a lot of credit cards are at 18% or higher, so if you're paying that minimum balance, it would take you 93 months to pay off that debt, and that's based off of having a $1,000 balance. Now, what's interesting to note is if you take that 2% and you bump it up just 1% by 3%, you're cutting down your payback time in half. And what that means is that you're also cutting down the amount of interest that you're paying in half. So I understand that sometimes money can be tight and sometimes you do have to make a minimum payment on your credit card because you can't afford to pay everything. But if you can pay just a little extra, it can have a huge long-term impact on how much you're actually paying on that debt and how quickly you have that paid down. All right, so information on credit card statements. Again, there is a ton of stuff on these. It will tell you what your interest rate is, which is also known as an APR. It will tell you if there's a cash advance fee. So if you go to an ATM or a bank to get cash off of your card, it will tell you what the fee is for that. It will tell you that there's a minimum payment and what the due date is. It will also tell you if there's that grace period. It will tell you how much it will cost you to pay off the debt if you make the minimum payments versus if you make extra payments. And it will tell you how long it will take to pay down that debt. And this is something that's a relatively new feature on credit card statements. And so that's helpful for you to know as a consumer. It will tell you what your credit limit is. So again, what you can borrow up to. And it will also tell you if there's a late charge and how much that is and when it would apply. All right, so you can also get what's called an ATM card. And this is if you have a checking account through your credit union, you can apply for an ATM card. This can also be used if you have simply a savings account. And so this allows you to access your money. You can get cash out at any ATM. And you can not use these for purchases. You can only use them for cash out. Watch out for fees. So at Hometown Credit Union, we do not charge a fee for an ATM withdrawal at any ATM. However, that ATM owner might charge you a fee. So if you stopped at an ATM for a competitor and they charged you a $3 fee, that would be from them, but we would not charge you a fee for that. Hometown does have a network of ATMs, as well as Quick Trip gas stations have free ATMs too, so you can utilize those to avoid fees. All right, so debit cards. Sometimes debit cards are confused with credit cards because oftentimes they have a Visa or MasterCard logo on them. The first debit card program piloted back in 1966, which coincidentally was when the MasterCard program was unrolled. The popularity increased in the 80s and 90s as ATMs became more popular. And the increase in debit card usage has decreased the use of checks. So again, debit cards can be used if you have a checking account with your credit union. You get this debit card and you can use it any place that credit cards can be used. But instead of having to pay interest on borrowed money, you're actually spending your own money with a debit card. Now, debit cards, again, can be used for purchases, but they can also be used for cash withdrawals, just like an ATM card. Again, the money comes right out of your checking account, and the money gets paid immediately to a merchant, unlike a check. If you were to write a paper check, that merchant has to submit that through their financial, and then it comes back to your financial, and it takes a little bit of time for them to get payment. Now, even though a debit card does have a Visa or MasterCard logo on it, it does not help you to build credit. However, debit cards do offer the same fraud protection as credit cards. Debit cards have fraud monitoring services, and they will keep an eye out for suspicious transactions, as well as that same feature where if your card is stolen, you get up to 60 days to report any transactions that were not yours, and then you can get those funds refunded. All right, that's everything I have for you today. Be sure to contact me if you have any questions and check out our other videos. We've got a variety of excellent financial education videos on our Hometown Credit Union website. Thank you so much for joining us tonight, and we'll see you again soon.